This is Nightly Business Report with Tyler Matheson and Sue Herrera.
The rally stalls. Stocks drop, crude crumbles, yields hit record lows as investor attention turns to jobs and profit reports.
No charges. The FBI recommends against charging Hillary Clinton in her handling of emails as Secretary of State. But the controversy may not be over.
And the next cash crop? Why California farmers may be starting to plant the seeds of something really big. All that and more tonight on Nightly Business Report for Tuesday, July 5th.
Good evening, everyone, and welcome. It was nice while it lasted, but the rally that led to the biggest weekly gain of the year did not spill over into the new week. This as investors grew increasingly concerned about the strength of the global economy. In a major report, the Bank of England warned that risks associated with last month's vote by the UK to leave the European Union were starting to crystallize. In response, the British Central Bank took steps to bolster lending.
3/4 of UK banks, accounting for 90% of the stock of UK lending, will immediately have greater flexibility to supply credit to UK households and firms.
Uncertainty over policy both here and abroad sent stocks lower. It also pressured crude and sent the yield on the 10-year Treasury to a record low. The Dow Jones Industrial Average lost 108 points to 17,840. The Nasdaq was off 39. The S&P 500 was down 14.
Well, it's not just the UK economy that is feeling the effects of the so-called Brexit vote. The impact could spread to other weaker parts of Europe, like Italy, and potentially cause more serious problems. Michelle Caruso-Cabrera explains.
More than a week after the vote in the UK to leave the European Union, there is one clear victim. It's the Italian banking sector. Italian banks have fallen more than 30% since the vote, and year to date, they are down more than 50%. The Italian banking system has long been troubled, swamped with bad loans, and they need more capital. The world was reminded of this yesterday when Monte dei Paschi, that's the world's oldest bank and Italy's third largest lender, informed the market that the ECB, the European Central Bank, was demanding that they do even more to clean up their balance sheet. So their stocks and bonds have fallen even further. Italian banks overall have an estimated 360 billion euros, that's roughly $400 billion of non-performing loans. So no one disputes that the banks need the capital. What there is a dispute about is how the banks should get that money. The Italian prime minister would like the government to help out the banks. However, new Eurozone rules that went into effect on January 1st prohibit a government from using taxpayer money to bail out a bank. That is, unless they first punish the shareholders and the bondholders. And in Italy, it just so happens a lot of retail investors, what we call mom and pop investors, hold bonds that could potentially get wiped out or suffer severe losses in the event of a bailout. Prime Minister Renzi wants an exemption to those rules, and he says Brexit justifies that. So far, the Germans and other members of the European Union disagree. However, there are growing concerns across Europe that if small investors believe they've lost money because Italy belongs to the European Union, it could lead to even more demands for a break from that union. For Nightly Business Report, Michelle Caruso-Cabrera.
Well, the stock market has indeed been volatile since the UK vote, and that's making one thing clear for investors. The fallout and its impact on the markets will likely linger for a while. Dominic Chu has more.
Stocks in the U.S. took a breather today after 4 straight days of gains, and that was all on the heels of that vote by the United Kingdom to leave the European Union, that so-called Brexit vote. And it could be a big part of the market story for months and possibly years to come.
You're talking about a potential recessionary item for the UK, if not Euroland. And then longer term, of course, the possible other dominoes to fall. What are they calling it? Italy and Portugal. So it's the canary in the coal mine here. It's potentially a very significant event.
Many investors used the recent sell-off to buy stocks at a discount, and as a major result, the 10 industry sectors within the S&P 500 are positive since the market lows on June 27th. While healthcare and industrial stocks have posted some of the biggest gains, materials and utility stocks have posted some of the smallest ones. A number of big-name stocks have not participated in the post-Brexit rally. Among them, familiar names like Zions Bancorp, also farm equipment maker Deere & Company, chain restaurant owner Darden, and oil and gas company Southwestern Energy. But overall, some experts believe that the U.S. still represents one of the most attractive places to invest in the world.
To the extent Europe dissolves economically, we'll have a much stronger hand, and U.S. stock and bond prices and currency should fare well over the intermediate term. So lots of potential opportunity, but at this point, without some of the geopolitical uncertainties resolved, it's a real gamble.
As for what to expect in the second half of the year, a lot will depend on the global economy.
If we don't see world growth hold up and companies around the globe's earnings come in better than last year, to me that's the absolute key that's going to drive the market higher. If things stay relatively flat, earnings stay flat, I think the markets probably stay in the band they've been trading in for the last couple of years.
Now, add to that potential action or inaction by the Fed, as well as other central banks around the world, and of course our own presidential election uncertainty, and you have the makings of what could be a rocky ride for the rest of the year. For Nightly Business Report, I'm Dominic Chu.
So with concerns about the global economy sending stocks down today, will the jobs report and earnings season that kicks off in earnest next week be the catalyst that might help lift stock prices? John Canale is Chief Economic Strategist at LPL Financial, and he joins us now. John, welcome back. Good to have you with us. Let's talk about and maybe dispose of the thing that Michelle Caruso-Cabrera was just talking about earlier, the Italian banks. Do American investors need to worry about what happens to Italy's banks?
You know, I think you do. It'd be similar to what we went through about a year ago with the Greek banking system. If there is a spillover effect, it might impair the ability of our banks to lend to businesses and consumers. So, yeah, I think it is worth watching. I think the silver lining over the last 6 or 7 years is that central banks and policymakers know now better how to respond to these type of things. And in the wake of the Brexit vote, central bankers have largely done and said all the right things to help calm markets.
You know, today, though, they weren't calm initially. How worried are you about Britain specifically? Yes, the central bank obviously made moves today to try and loosen up lending and free up more capital, but a lot of people think it's going to take a while for that to actually play out.
Yeah, I think it's going to be a difficult environment within the UK. The pound is down to 30-year lows. That's going to make it difficult to do business. It will cushion the blow right away. It'll make their exports a little bit cheaper to overseas markets. But I think the UK is at least going to skirt a recession over the second half of the year and probably will fall into a recession early next year. The impact of that, though, on U.S. companies is probably pretty muted. Only about 5% of U.S. company earnings are derived from the UK.
Britain's biggest export is Adele, I think. Let's move on to the U.S. And what you see in U.S. profits. One of the prior guests in Dom's piece said that if profits don't start to click upward, we're going to be calm for a long time in the markets. How do you see U.S. profits?
Yeah, well, we're just about to head into the second quarter earnings reporting season, and I think that's actually a bright spot. We've had this Brexit vote a couple of weeks ago. Now we're going to hear from these big multinational U.S. corporations that are doing business in Europe and the Eurozone, and we're going to hear directly from them how this might impact their second half of 2016 and maybe even 2017 as well. And I think when all is said and done, they'll fare okay. We still think earnings are going to be down about 4% year over year. You have some lingering impact of the stronger dollar and weaker oil prices. But I think the guidance for the second half of the year is going to be far more important than what companies tell us about the second half or the second quarter. Remember, the second quarter is pre-Brexit. The second half is post-Brexit.
So,
what the market wants to know now is what's going to happen in the second half.
So watch the guidance, not the rear-view mirror. John Canale, thanks very much with LPL Financial.
Well, those concerns that Britain's exit from the EU could potentially slow the global economy weighed on the price of oil today. If the global economy slows, then demand won't grow enough to offset the supply glut. As a result, domestic crude slid nearly 5% today to $46.60. A separate report estimates that the U.S. is sitting on more untapped oil than any other country in the world. According to Rystad Energy, more than half of America's untapped oil is unconventional shale.
Orders at U.S. factories dropped in May. The Commerce Department reported a 1% decline. Those numbers dragged down by less demand for steel, furniture, and military aircraft. The lackluster performance of the manufacturing sector has been blamed on weak growth around the globe.
The president of the New York Fed says the outlook for U.S. monetary policy is uncertain right now, especially following the British vote. Bill Dudley said that the central bank will watch the data before deciding what's next for interest rate policy. Until recently, the Fed was widely expected to raise interest rates at some point over the summer.
One of the most important pillars of the U.S. economy, of course, is the consumer. And even before last month's UK vote to leave the European Union, there were mixed signals about whether U.S. shoppers are on hold or on solid or shaky ground. Mike Santoli tries to make sense of it all.
The American consumer is the single biggest driver of the world economy. From a broad view, consumer fortunes look bright. Unemployment is low, job openings are at a record high, and wages have been growing faster than inflation for a while now. The housing market continues to rebound. What's more, the average household has borrowing under control. The percentage of income needed to service debts hasn't been lower since the 1980s, thanks to low interest rates and smaller balances. Yet stocks that are closely linked to consumer spending and lending have been conspicuously weak in recent months, a hint that the markets are concerned conditions might worsen from here. Whether retailers, car makers, airlines, or credit card stocks, the shares that should be helped by a flush consumer are having a tough year. This might be because credit card and auto loan delinquencies have turned higher lately, albeit from extremely low levels. This raises early alarms that this consumer credit cycle might be turning for the worse. Now, this might also simply represent an excess of worry by investors who were burned ahead of the last credit crunch. Even after last month's disappointing employment report that showed just 38,000 new jobs added in May, the backdrop for the typical worker seems benign. The bottom line, consumers for now seem to have an ability to spend more, but with financial market turmoil and a contentious campaign season underway, it's unclear if they will choose to open their wallets wider in coming months. For Nightly Business Report, I'm Mike Santoli at the New York Stock Exchange.
In Washington, the focus was on emails, specifically those of Hillary Clinton while she served as Secretary of State. Despite a blistering review of Clinton's actions, the FBI said it will not recommend criminal charges be brought against the presumptive Democratic presidential nominee.
Although we did not find clear evidence that Secretary Clinton or her colleagues intended to violate laws governing the handling of classified information, there is evidence that they were extremely careless in their handling of very sensitive, highly classified information. In this case, given the importance of the matter, I think unusual transparency is in order. Although there is evidence of potential violations of the statutes regarding the handling of classified information, our judgment is that no reasonable prosecutor would bring such a case.
John Harwood joins us from our nation's capital tonight. John, was Director Comey's statement today a surprise or not?
Well, a couple of surprises. First of all, the fact that it took place. We know that Hillary Clinton was interviewed over the weekend, didn't know how quickly the director would come out and issue his conclusions. It was not a surprise that he did not recommend criminal charges to the Justice Department, but it was a surprise just how blistering that review was that you played that soundbite of, saying that Hillary Clinton and her aides were extremely careless, that even if the material was not marked classified, they should have known that it was classified. It was very strong criticism of the secretary.
The campaign later today, after the Director Comey's statement, said, "We are pleased to put this matter behind us." Is it?
No. As a legal matter, once we hear from the Justice Department, and Loretta Lynch, the Attorney General, has said that she will follow the recommendations of career officials, and certainly James Comey meets that test, legally it will be behind her. However, politically, those words from Director Comey are going to be heard throughout the fall campaign. And of course, Donald Trump was out on Twitter very quickly saying it's evidence of a rigged system.
Yeah, it must have been awkward, or maybe it wasn't, for the president today because it was his first campaign stop with Hillary Clinton after the FBI director criticized her.
Sue, if only we could have been on Air Force One with Hillary Clinton and Barack Obama after that Comey announcement. But yes, it was certainly awkward that the president's FBI director criticized his former Secretary of State. However, President Obama did not betray any of that awkwardness on the stage today. He was extremely enthusiastic about going after Donald Trump. He was enthusiastic about defending Hillary Clinton. He gave every sign that he is going to throw himself into being a surrogate to try to make sure that he's succeeded by a Democratic president.
What do we know about the Trump campaign's search for a vice president?
Well, we know that Donald Trump has been having a series of meetings with potential vice presidents. Joni Ernst, the senator from Iowa, Mike Pence, the governor from Indiana. He's going to be campaigning tomorrow with Newt Gingrich, the former House Speaker. Chris Christie has been close to Donald Trump since he got out of the race in 2016 himself. All of those are potential choices. We believe that Donald Trump will make that announcement next week in advance of his convention. We could also get Hillary Clinton's announcement as well next week, because when you've got the Republican convention immediately followed by the Democratic convention, there's not going to be a clear space in the media for Hillary Clinton to select her running mate. We could get both next week.
All right, get your rest, John. You're going to be one busy guy. Thank you so much. John Harwood in Washington.
Still ahead, cash is king, but not in the fast-growing marijuana industry. We'll tell you why. Shares of Tesla came under pressure today after the automaker said it delivered fewer vehicles than expected in the second quarter of the year. The stock closed down more than 1% on this down day, but that was way off the lows of the day, and this is the second time this year that Tesla has fallen short of delivery expectations. But as Phil LeBeau reports, the automaker says it is still on track to meet its full-year targets.
Tesla's jump from building one car on an assembly line to cranking out two vehicles, including an SUV packed with complex features, is taking longer to ramp up than many people were expecting. Tesla delivered 14,370 vehicles in the second quarter, well below analyst expectations. About a third of the vehicles sold to customers were the new Model X SUV, with Falcon Wing doors that have slowed down the company's plans to speed up the assembly line this year. Tesla has admitted to overreaching on the complex design of the Model X, and they are paying the price, wrote one analyst. While investors knock Tesla shares lower, the company points out it still expects to deliver at least 80,000 vehicles this year, a target that will require the company to dramatically increase production from now through December. If that happens, Tesla CEO Elon Musk will say it shows his company is ready to push production even further for the new Model 3 scheduled to come out late next year. The Model 3 is at the heart of Tesla's big goal, building 500,000 vehicles annually by 2018, a target Tesla is sticking by even as it struggles to meet near-term sales estimates. Phil LeBeau, Nightly Business Report, Chicago.
Delta Airlines cut its second quarter forecast for a key revenue figure today, and that's where we begin tonight's market focus. The company cited higher fuel costs and a decline in a consolidated passenger revenue as factors in its weakened outlook. Shares of the airline fell more than 3% to $35.62. Apple shares fell after Citigroup trimmed its earnings estimates on the widely held Dow component. The bank cited uncertainty stemming from Britain's vote to leave the EU. It also cited currency volatility and longer iPhone replacement cycles. Shares of Apple fell a little less than 1% to $95.05. BlackBerry will stop producing its classic smartphone, one of its last models that has a physical keyboard. In a post online, a company executive cited the need to keep innovating and advancing our portfolio. Software updates for existing users will still be rolled out into next year. Shares of the company fell in today's down trading session by more than 3% to $6.53.
Pharmaceutical giant Bristol Myers Squibb bought Cormorant Pharmaceuticals, a Swedish firm that specializes in immunotherapy drugs. The company could spend upward of $520 million on the purchase of Cormorant. This is Bristol's latest deal involving drugs that use the immune system to attack tumors. Shares of the drug company rose fractionally on the day to $73.80. Comcast and Netflix have reached a deal that will put Netflix's content on Comcast's X1 cable set-top boxes. Say that 10 times fast. Comcast has well over 20 million video subscribers across the country, and approximately 35% of those customers have the souped-up X1 box. Shares of the cable company fell slightly to 65.01. Shares of Netflix up at 97.91. Comcast is the parent company of CNBC, which produces this program. Well, the racetrack owner International Speedway saw profits fall in the second quarter. Despite a rise in revenue, the company, whose properties include the Daytona International Speedway in Florida, also lowered profit and revenue forecasts for all of 2016. Shares slipped more than 5% to $32.24.
The maker of Twinkies is preparing to take its stock public. The owners of Hostess Brands struck a deal with a special purpose acquisition company to return to the public market. The enterprise value will top $2 billion. It comes about 4 years after Hostess filed for bankruptcy protection.
Well, marijuana may be legal in a growing number of states, but doing business in the weed trade is anything but simple. One big problem: federal banking laws make marijuana merchants virtually untouchable. Eamon Javers reports from Portland, Oregon.
Every month, Don Morse, owner of the Human Collective marijuana dispensary in Portland, Oregon, loads about $15,000 into a nondescript bag and makes the 45-minute drive down to the Oregon Department of Revenue to pay his taxes in cash. Morse would rather send a check. It's easier and safer for him and his employees. But even though recreational marijuana is legal in Oregon, marijuana businesses still struggle to get access to the banking system because banks are wary of breaking federal anti-money laundering rules.
People come in, we can't take credit cards. We do have an ATM here. People can get cash for their purchases, but everything has to be done in cash. We take the money in, a sizable amount.
That gap in the rules has created an opportunity for third-party financial entrepreneurs who are creating ways to get marijuana cash into the regulated banking industry. In Las Vegas, entrepreneur Sylvain de Rassier is selling kiosks designed to take in and secure cash at the point of sale. He's applying lessons learned from the gaming business in how to keep organized crime out and help newly legal businesses comply with the law.
How do you get rid of the organized crime in these type of businesses is by having solid compliance. There's no secret about it.
The biggest coup for the nascent industry came last week as Microsoft became the first large company to dip its toe into the marijuana business. The software giant announced a partnership to sell government-compliant software with a Los Angeles-based startup called Kind Financial.
You know, marijuana, the cannabis industry, any way you want to look at it or slice it, it's the fastest growing industry in America.
Don Morse and his colleagues at the Oregon Cannabis Business Council continue to push legislators for more access to the banking system. But all of that is likely going to have to wait for more action out of Washington, D.C. For Nightly Business Report, I'm Eamon Javers in Portland, Oregon.
All right, speaking of growing things, coming up, can California's farmers feed the growing demand for what some call the perfect food?
The economy is front and center among the topics to watch tomorrow. The Federal Reserve releases the minutes from its June meeting where the committee decided to leave interest rates right where they are. Fed Governor Daniel Tarullo discusses monetary policy and financial regulation, and new reports will come out on trade and the services sector. That's what to watch Wednesday.
America is in the middle of a quinoa craze. Up until now, the grain has been grown almost exclusively in South America, but as it turns out, it has the potential to be California's next cash crop. Jane Wells has more from Elk, California.
This variety is called cherry vanilla.
You're looking at what could be the perfect food being grown in the perfect place.
It's a super food.
It's quinoa, a gluten-free grain which contains high amounts of protein and essential amino acids. A weed, really, which doesn't need much water to grow, and it is showing up in more food products.
Quinoa cakes, quinoa entrees, quinoa snacks.
Bryce Lundberg of Lundberg Family Farms is best known for growing organic rice for chains like Whole Foods. But he began experimenting with growing quinoa a few years ago because Americans are consuming tens of millions of pounds of the grain annually. Up till now, quinoa has almost exclusively been grown up in the Andes of South America. The results in the U.S. were surprising.
So we're getting yields somewhere around 2,000 pounds per acre, and most of the literature says that in South America they're getting about 1,000 pounds per acre.
They've also discovered quinoa doesn't need a lot of water. Good news for California, and it doesn't need to grow at high altitudes.
You know, a lot of people will come to us and say, well, you've got to grow it at 10,000 feet. And here we are right at the edge of the Pacific Ocean, right? And it's, what are we, maybe at 50 feet, if that? And it's growing beautifully here.
This year, the farm will produce 1.5 million pounds of American-grown organic quinoa with a wholesale value passing $3 million. It's a small start, but it may be the seeds of something big. For Nightly Business Report, Jane Wells, Elk, California.
Ty and I thought it was quinoa. Quinoa.
It isn't?
No. To read more about California's latest cash crop, head to our website, nbr.com.
And before we go, here's another look at how the market started this holiday-shortened week. The Dow off 108 at 17,840. NASDAQ down 39. The S&P 500 off 14.
That's it for Nightly Business Report tonight. I'm Sue Herrera. Thanks for joining us.
We'll go home to some quinoa. Tyler Mathisen here.
Quinoa.
Have a great evening, everybody. We'll see you tomorrow.